Okay, traders, welcome back to the channel. Here we have the EURUSD weekly time frame in front of us, and we're going to be going over the regular weekly outlooks for both EURUSD and GBPUSD. Sorry for the few weeks of absence of these particular videos. I know they were quite popular on the channel, so I thought I'd bring them back. So people have a rough indication as to how we can look at the markets from a higher time frame perspective. So of course, here we have the weekly time frame, like I said. So the first thing we look at is our market structure. So we have a structural low, structural high, structural low. From here, we now see price giving a structural high, and then we have our breaker structure over here. So overall, our structure is bearish. Okay, so when it comes to analyzing higher time frame structure, right, or higher time frame narrative as a whole, there's four things we look for, right? So the four things we look for are market structure, or structure for short. We need to understand what dealing range we are in. It's then important to understand where the PD arrays are, the premium and discount regions. And the last thing we want to be looking at is where are the fair value gaps. And these fair value gaps are delineated by the POIs that you see on the screen in front of you, the rectangles. So these are the four essential criteria to looking at a higher time frame, to how to build a higher time frame narrative, right? So from here, if we quickly bring this over, let's quickly go over how I'm looking at the markets based off the information I'm just giving you, right? So structure, dealing range, PD arrays, and fair value gap. So the structure is, of course, we have bearish structure, which is shown by this line over here. This is a break of structure to the downside. Our dealing range consists simply of price going from this swing high and engineering this swing low down here, which I haven't marked up, but we have a swing low here and a swing high over here, right? Now, the Fibonacci tool, the way I've used, very simple settings, gives us the premium and discount arrays, the PD arrays, right? So we have the equilibrium over here. So this 50% level marks out the equilibrium. Anything below is a discount, anything above is a premium, right? So we understand that, right? That's basic market knowledge. Now from here, once we've identified our PD arrays, we then look for fair value gap. So in the discount, we of course have a fair value gap all the way down here, which isn't of interest to us at the moment because I don't think price will get here anytime soon. This is below parity, so 0.9980, so we don't need to worry so much about that. And we have POIs above here, just like this, right? So quickly, what makes a POI? It must break structure. It must leave a fair value gap, which it has over here. So this is a fair value gap that the market has left. And it must be priced correctly. So for example, we have our premium and discount like I discussed. We are now in the premium, and therefore this is what makes a valid POI because it fits our rules. Okay, so now that we've identified a fair value gap, a quick extra confluence, right, or a quick extra thing to point out is that we have an inducement over here. So this is an inducement. And so what makes this an inducement? It's simply liquidity dropped before a POI. So this makes this POI quite a valid area that we could be targeting in the next few weeks and months. And this POI is priced at 1.151. 1.151. So now if we look at most recent price action, what we've seen is we're hovering pretty close to the equilibrium over here. Hence, we have the sort of choppy price action, you could say, from a weekly perspective. So now, since we are in the discount, right, it's important to understand we have two very important areas. We have one, drawn liquidity, so DOL, drawn liquidity, that's at 1.127. And we have another draw of liquidity down here at 1.044. So from here, if the bulls continue to win, if we do have sustained bullish price action over here, then this then becomes our next drawn liquidity and therefore becomes the next target. But overall, we're still looking to target the POI up here at 1.15, like I previously mentioned. But we understand that we also have a weak low down here. So this is a weak high, and this is a weak low, simply because both of them haven't contributed to making significant new swing structure, right? We've seen daily breaks of structure, which we're going to get to, but we haven't had a significant break to the upside or the downside here. And that's simply because the structural low is all the way down here, and the structural high, remember, is all the way up here, right? Or sorry, all the way up here. So we haven't had significant breaks of structure to the downside or the upside, hence why we're trading between two weak structures on the weekly time frame. So now with this in mind, if we take it down to the daily time frame, now we use the same exact principles on the daily time frame. So if I quickly bring them out on the bottom for you, so what we have here is market structure, or simply structure for short. Then after market structure, we want to look at the dealing range. Then after the dealing range, we want to be looking at the premium and discount arrays. And last but not least, we want to be looking for the areas of fair value gaps, the areas of inefficiency, right? So if we bring that to the bottom of the screen so people can see, structure, if I spell that correctly, so structure dealing range, PD arrays, and fair value gaps, right? The four secret pillars to determining a higher time frame bias, right? So of course, what we have over here is we have bullish structure over here giving us highs and lows, higher lows, higher highs, higher lows, before this high creates a break of structure to the downside, right? So now that we've established a break of structure to the downside, we've now essentially identified, number one, our structure, our highs and lows. We've identified the dealing range, right? The dealing range gives us the most recent swing high to the most recent swing low. So this also gives us, in conjunction, our PD arrays, right? We have the 50% level over here, anything above. So this POI is in premium, this POI is in discount, and the fair value gaps have been marked out with the POIs respectively. Right, now from here, we should look at more recent fair value gaps as well. So based off the daily time frame, what we have is we have a fair value gap over here, right? So this red line over here is going to represent the daily fair value gaps, right? So we understand, just simply based off a market perspective, right? We understand that the IPTA, or the interbank price delivery algorithm, is poised to target inefficiencies or target fair value gaps, right? So if the bullish momentum were to continue, which I think it will, we have our first initial target going into the week, right? So this is the first sell side imbalance that needs to be filled at price 1.085, right? 1.08497, beg your pardon, right? Now, of course, off the daily time frame, there isn't so much that we can take from it other than the fact that we are in a discount. And from discount, price typically moves from discount to premium, right? So it all comes back to the secret four, right? The four pillar success: structure, dealing range, PD arrays, and fair value gap. So we're going to take this same ideology, right? This same principles, right? The same four secrets to determining a bias. And we're now going to go down to the 4-hour time frame to see how we can use the same principles, right? So the 4-hour time frame again paints a similar picture to the daily time frame. Well, what we've had over here is we've had two breaks of structure, right? So if we really zoom out on price, right? This is a bird's eye view on price. So what we had is we had a bearish break over here. We had a bearish break one. We saw a price retrace back into a premium before giving us a bearish break two. So we understand that our structure is bearish. We understand, based off the PD array tools, that our premium and discount arrays also tell us we have H4 POIs up here, or 4-hour POIs over here. We have 4-hour POIs down here as well, okay? So this is the overall narrative for the euro dollar. So there's a couple of things, right? I overall think we're going to get up to at least this POI over here. So this is 1.0878, right? 1.0848. 1.0848. I'm even going to mark that here for people to see, right? 1.0848. So this is the next overall POI I expect price to get to. And there's two very simple scenarios, right? We can either continue long, or we understand that we have a POI here. We have a fair value gap in the discount. So this is a valid POI you see here. Or we can simply mitigate a lower POI before heading higher. So these are the two POIs that we have that are of interest to us. These are the major points of interest I want to bring to people's attentions, right? So this is a quick outlook of Euro USD. So we are bearish, but I do expect higher time frame, higher prices, eventually to get up to these higher time frame 4-hour POIs. So now we're going to repeat the same exact process, but on GBP USD on the weekly time frame. So we understand we have four basic pillars, like I said, right? We have structure, dealing range, PD arrays, and fair value gaps. So the weekly time frame again paints probably an even clearer picture. So what we've had is we've had a break of structure to the downside, right? So this is our first break of structure over here based off the time frame you see. So this is our first break of structure, right? Let's label that in black. So this is our first break of structure over here. Now this is our second weekly break of structure. So this is our bearish structural range to deal with, our bearish dealing range, right? So from here, we have price giving us a swing high, and we see price giving us a swing low down here. So now let's go into price. We understand that we have a fair value gap just over here. This is what makes a weekly POI, right? But we also have a weekly POI up here. So again, let's quickly go over what validates a POI, right? Based off the euro dollar time frame, it's exactly the same principles, right? So we understand this POI led to a break of structure. This POI left a fair value gap, right? So if we quickly go over to the left, we see a clear sell side imbalance that's been left over here. So we see a break of structure, a fair value gap, and we see the fact that we are in the premium. We are firmly priced above the equilibrium level over here. So if we look at most recent price action, again, very similar to the euro dollar, which is not surprising. What we've seen over here is we've seen price respect a bullish POI over here, or we've seen price mitigate into a fair value gap over here. So we've seen price respect a zone, right? We've seen price respect this zone over here, right? So this here is a weekly POI that's been respected. And now from here, as we've mitigated and tapped this region over here, price has then shot higher, making this a weak structural high in the markets, right? It's a weak structural high and we have a fair value gap above, right? So if the bulls continue to win, right? If the bulls continue to win, bearing in mind we've also mitigated a fair value gap just over here as well, right? So we've seen sort of a demand chain. For those who trade supply and demand, we've seen somewhat of a demand chain, or simply put in ICT concepts, we've seen price respect bullish POIs or mitigate bullish fair value gaps, right, before heading higher. So now my overall outlook, if the bulls continue to win, I expect this high to be taken at a minimum, right? So this high is currently at 1.313. So 1.313. This is the next overall bullish target for GBPUSD. So if we go down now to the daily time frame, the daily time frame paints quite an interesting picture, right? So we understand that the structure itself is bearish. We have a dealing range here. So if I quickly mark out the dealing range for people to understand, we have a dealing range consisting of this swing high down to this swing low. We understand this is the premium range, and in this premium itself, we have a bearish POI, right? But we also have bullish POIs down here as well, right? So the daily time frame for me is less decisive, right? The weekly time frame paints a bullish picture. The daily time frame doesn't give us too much information because we're quite close to the equilibrium as well. Price could be choppy. So if we now go down to the 4-hour time frame, ironically, the 4-hour time frame paints a similar picture to that of the daily of the euro time frame, which is not surprising at all if you understand that these pairs are correlated. Again, it's the same old concepts rinsed and repeated, right? So what we have over here is we have bearish structure, right? This swing high to this swing low. So our dealing range is essentially this region over here. So this is our dealing range, right? This gives us our dealing range in the markets. We have a premium up here. We have a discount down here. Right, the overall narrative now I have. So if we zoom into the intraday price action, right? Again, seeing as we are in a discount area, we're having somewhat of a correction. This price action can be quite choppy, so it's important to be careful, right? But again, the overall narrative is to reach this POI. So this POI is priced at 1.267. So this is, let's label that as 1.2670, 1.2670. This is the next overall target for GBPUSD. Bearing in mind, we could see something like this. So we could mitigate this POI, which is at 1.241. And then from there, we could then see higher prices up to here, right? So again, be open, be fluid, understand the 4 key principles, which we're going to end the video on, right? The 4 key principles are very important to understand. If there's nothing else you took from this video, please understand how to build a natural bias on any market. Mark out your structure, understand your dealing range, understand where the premium and discount arrays are, and last but not least, where are the POIs? Where are the fair value gaps? Where is price headed to next, right? We want to aim for premium POIs and discounted POIs, which are simply fair value gaps in the market, right?